Hello everyone and welcome back to another episode of the Blockchain Gaming News Roundup. Today is Friday, 1st of August. I'm Jenny Jordan and with me is co-host John Jordan. Hi John, how are you?
Yeah, all good.
Good. So today we are going to keep it short and sharp. We're going to talk about Craftworld, Shrapnel and FIFA Rivals. Let's kick off with Craftworld. It's launched on Ronin, one day too late, I suppose, and not entirely free of technical issues, but we got there in the end. What are your takeaways from that? And maybe more importantly, what did you earn from all that grinding over the last years?
Yeah, so as you say, they had some sort of problem. They sort of didn't really go into the details, but said sort of a service provider issue. I mean, I guess one of the things is they were running this Project Voyager, which is a 4 week long sort of play to airdrop, effectively a play to airdrop campaign. And the top 25,000 wallets all got an allocation of this DynoCoin, which was which is their sort of main currency. And when the game Craftworld went live on Ronin, previously being on a testnet, then you could go through this claim process. So obviously, what happens is in that situation when there's a day and a time for you to claim, everyone piles in. So I'm sure they sort of have done some maths around how they're going to sort of queue people up, because you've got 25,000 people all hitting this claim button at the same time. Obviously, everyone wants to get their tokens really early as possible, if they think the price is going to drop. So there's that. And the Ronin blockchain, I think, only does about 500 transactions per second. So you can just see there's a sort of an issue there. So that didn't work, and they sort of had to just reset it. It worked fine the next day. I guess I was surprised they didn't do a bit more around getting people to, because basically there's two ways of claiming. There was one, put in your Ronin wallet address and they would send you the tokens to your Ronin wallet, or you could use your Via ID, which is your game ID, and they would just send them to your game wallet. Obviously, they would want to get people to send them to their game wallet where you're going to use them in the game, rather than your sort of Ronin wallet where it meant people could potentially sell them off. So I was surprised they didn't do more around. We've seen people in the past saying, don't claim your tokens now, stake them, and get more in the future. I guess the issue with DynoCoin, though, is it's, as we've mentioned many times, is that while it is a proper cryptocurrency, it is designed to be purely transactional. Almost by design or by sort of extension, the price of DynoCoin is just not going to go up. One reason is they can mint more, so it's like they've not got a fixed supply. But the other thing is it's literally designed to be a transaction currency. So if I have DynoCoin, I can buy other resources in the game. So it's an idle resource game. So you always want more of certain resources to sort of build up your factories. So maybe I want more copper. So I would sell my DynoCoin to buy more copper, to upgrade my factories to make more copper. And then the next day I'd want more, I don't know, I'm making up now, more electricity. So, so the whole point is you're sort of selling resources in the game to get DynoCoin, to sell DynoCoin to get resources. So it's not supposed to ever sit there like Bitcoin and sort of go up in value. So maybe that's the reason they just sort of thought we'll sort of launch this, and as sort of always happens, the price goes down, and in this case, you sort of found the typical brainless sort of KOLs going, "Oh, the price has gone down, 66% already. Why has this happened? And why haven't I won more money?" So to go back to your question, I was ranked about, I can't remember what it was now, 1,300 on that 25,000 leaderboard, and I got 125,000 DynoCoins, I think, and when I claimed them, that was worth like $30. And the person who won the sort of was top of the overall Project Voyager experience. He got 12.5 million DynoCoin. That was sort of the top prize, and that was worth £2,500. So in crypto sort of experience, people get very annoyed by that. If they don't get like at least $500 by just pressing some buttons for a while, they get really sort of annoyed for some reason that they're not, the magic money tree hasn't given them more money. But clearly the point of DynoCoin is this was what they call a fair launch. So all the DynoCoin went to the people who played the game. The team didn't get any, the investors didn't get any. the KOLs didn't. There was no KOLs. It's not on centralized exchanges. It's just on a small amount of liquidity on dexes on the Ronin blockchain. So the whole point is, obviously there is a sort of tricky dilemma there that anything on a blockchain does have a value, because that's sort of, someone needs to spend energy and have computers to make the blockchain work. So there is a sort of economic baseline cost to sort of running a blockchain, and the token sort of will take a value based on that, and then what trading happens around them. So every blockchain token has to have a value, but in this case, it's not designed to have a value external to the game, even though it does, and even though as human beings our focus is basically on how much of this thing have I got that's worth this amount of dollars. So there's quite a difficult dichotomy they've sort of got there.
So let's stop.
I think they sort of
So they put something in place there for people not to go and extract their money straight away. Although you can argue, why would you if you had done like $2 or whatnot? So let's move on to that.
Good.
Yeah.
So yes, so we have seen other sort of people do something sort of similar. I guess Pixel's been the sort of main example where you have a very easily extractive game. Pixel was designed as a play to earn game. It marketed itself as a play to earn game, whereas Craftworld hasn't done that. But in terms of like Pixels, they have this VIP system. So in order to cash out your Pixels over time, they've made it harder and harder, and there's more sort of barriers in the way. So for Craftworld, it's quite sort of straightforward. They have a thing called the Pro account. So you have your game resources in your game wallet. And then if you want to move those to sort of a trading wallet, I suppose, you have to have this Pro account. So you can either cost in the browser desktop game, it costs 15 RON, which is about $8, or in the mobile game you buy it as an in-app purchase, where it seems to be slightly cheaper actually. But basically that you have to if you want to transfer value from the game out, and the only reason you would want to do that is, well, I suppose there may be some other reason you may want to transfer it to someone else, but basically it means you want to sell it out. So you have to spend $8. So clearly they're sort of putting a sort of an amount sort of barrier that, I don't know because I wouldn't want to sort of cash out, but obviously you're going to probably want to, I would think, get around $15 to $20 worth of value in the game to make it worth paying the $8 to get the remaining whatever $12 out. So that seems like sort of quite a clunky way of doing it, but thinking about it a little bit, the main thing it does is it stops big bot accounts just taking, if you have 1,000 accounts and they're just each taking like a few cents a day, but you're sending it all together to a wallet and cashing it out, it basically stops that sort of that Sybil attack where just someone has come in specifically to extract from your account. Obviously, it does impact people who may have someone who's just playing the game and has $5 worth of value, and that $5 is meaningful to them because they come from a developing country. So it does hit those sort of people. But I think it's mainly more towards the bot side of things. And the other interesting thing is, I think once people I think the airdrop thing was sort of one particular event where you really want to stop people at the start of a game just extracting. So even if it only works for the first sort of 2 months, I think it sort of is quite an interesting proposal. And I was trying to work out actually how much money you sort of could earn in the game sort of on a monthly basis. It's quite hard because I have some NFTs, so I have so at the moment my game account, even though it's just started, is worth about $200, something like that. So if I sold all the resources and cashed them all out, then nominally my sort of account is worth $200. And that's one of the weird things about Craftworld is because it's a resource-based game, at any point you could go through and literally sell because all the resources are tokens. So you could go through laboriously and sell literally all your resources in the game to DynoCoin and cash it out. So that's a weird thing that in most games you can't sort of do that. You can't sort of extract the value from your NFTs. You'd have to put them NFTs on sale on a marketplace. This game actually doesn't have NFTs. It's all ERC20, so there's sort of a certain amount of liquidity in there. So you can see again why they had to have this barrier. So we'll sort of see how it works. I've been playing the game for a long time. I know the team really well. I know the CEO really well, and I think this is actually one of the people don't really understand how clever it is as a fully on-chain resource-based game, and I think the potential they have to do different things with it is quite is really good potential. So I hope they do well, and it's sort of in a sense. It's just good for them to sort of finally get this sort of game out on Ronin, and start to sort of build some of these sort of community events they've been planning. And they've got this Tamagotchi thing called DynoCoin, which is sort of quite interesting. I think like a AI agent on Twitter, and you have to send it resources, and it sends resources back. So I think they're still being quite experimental about what they're doing. But I think it really shows you couldn't do this game without blockchain. So we always like those sort of experiences.
Now the KOLs were annoyed. Maybe with not getting enough money, earning enough. You were annoyed for another reason. What's that?
I was annoyed for another reason.
You were a bit annoyed that they sent you back to zero in terms of having prizes.
Oh yes. Well, yeah. So because I've been playing the game for so long, I ended up level 265, like in the testnet version, because I've just been playing for so long. And I mean, they hadn't really specified it anywhere, and I hadn't really, thought it through in my mind. But clearly, when you start a new game, on the, when you basically go live on the mainnet, everyone sort of, I guess they could have done it that people started from where they were, but that's very complicated. It's much better to start everyone from zero. So having basically not quite maxed out everything in the game, but got quite a long way actually to that. I basically had to start from, literally from zero, which is just a bit annoying. I think I'm up to level 19 now, so I'm sort of slowly making it up. But it's but it does all equally remind you, as a one famous designer once said, that even with blockchain stuff, sort of, everything, although you always have your NFTs, everything always basically, if you don't do stuff with it, basically everything does go to zero, and you have to, and particularly actually for Craft World, it's a game where what you actually have is not the resources in the game, it's the factories and the level of the factories and how fast you can produce stuff. Because I'll go into the detail again, but you basically create these masterpiece events where everyone in the community has to come together and bring in resources to build something, and that's really the focus of the game is those events where they're going to be giving away NFTs and tokens and stuff as well. So I think that's sort of the focus of the game, and your resources and your DynoCoin are irrelevant. It's sort of how big your factory is. So they had to start everyone from zero, really, from that point of view.
Well, in other games like eFrontier and Soccerverse and those games have done similar things, but
yeah,
maybe they've been a bit more transparent about it beforehand, so it hasn't come as such a surprise. You were a bit shocked, I think. Anyway, let's move on to Shrapnel. So there was a surprise announcement from Shrapnel. You know that it was once probably the most anticipated blockchain game, about 2 years ago or so, and since then some kind of less positive news have emerged around the developer, and then they changed their CEO, not recently really, but 6 months ago or something. So that kind of indicated maybe they're on to sort of a different kind of trajectory. Then they announced that they were going to launch in China on the Chinese, what's it called, trusted copyright blockchain, as sort of the only approved Web3 game, the first anyway, to launch there. And so sort of following on from that, they have now announced that they are going to leave Avalanche, where they were building their L1, and move to GalaChain, which is another sort of fairly, what would you say, debatable, questionable kind of infrastructure. So anyway, talk us through that. Give us a bit more details.
Yeah, I mean, as you say, it's sort of been from the outside, sort of a catalogue of sort of weird decisions, sort of all the way along, which has culminated in Shrapnel saying that it is moving from Avalanche. It was literally one of the first games to have its own, what was then called subnet on Avalanche, its own blockchain on Avalanche. Got loads of support from Avalanche. It and Off the Grid were the big games on Avalanche, really sort of high end game from a sort of well experienced team. And it's interesting that the gameplay, as we've sort of been speaking about, the gameplay was fully sort of Web 2, so you had skins in it, but the Web 3 was sort of coming with the sort of ability to build maps and mods and all that sort of stuff. So that seemed to make a lot of sense. But I think sort of behind the scenes, there's this sort of lawsuit that was sort of still seems to be, I don't know if it's going on, or it doesn't really matter anymore. But I think it does show that some very fundamental initial conditions in a company can really have a big impact on the sort of how successful it is. So the sort of so the game developer is called Neon Machine. Actually, it's a bit more complicated than that. There's a few different companies, but anyway, that's the game development bit. But basically, it was part of HBO, and it made games it was the internal games making division for HBO, the American cable company. So that was why it was experienced in making high end games, because it was working for this very sort of high end sort of media company where they were happy to spend a lot of money getting very good people in. So they wanted to spin out, and basically they found an investor who would invest some money. And he was just he was someone who had other companies. He wasn't really a games investor, but they sort of knew of him or something So they sort of set out this agreement, and he invested. I can't remember how much it was, about $5 million or something, to bring this company out, and they did various things. And Shrapnel was sort of the whole big announcement when crypto was kicking off in 2022. But it sort of transpires that it was a very ambitious plan. They needed tons of money, so more than this single investor could put in. So obviously they needed to go out for third-party investment to VCs and stuff. But it just seems like the initial conditions in which they set up the company were not very well thought through. And then as soon as they started talking about tokens, the initial investor, because he had a majority shareholding, he had sort of control over what they could do, and they ended up with a sort of a really weird deal on where the tokens were going. And basically, over time, this investor fell out with the management team. So that was part of the lawsuit. I'm not going to go through all that again, but you can just sort of see that maybe that's what they needed at the time. He was the only investment available, so they did that. But I think that decision and that sort of breakdown of that relationship between the management team and the investor then caused problems all the way along, because that investor then caused problems. They did get some investment from other VCs, but that initial investor still had a certain amount of power, and he sort of caused problems all the way along, and that ended up with them making increasingly sort of weird decisions, and probably didn't help with the game's development. The game development was very slow, and I still think they probably made some internal mistakes that they the team was too big, it didn't move fast enough, probably the wages were too high. I had no idea sort of about that, but it tends to be the case. Sort of big American companies like that just pay very large amounts of money, and obviously they're high quality people, but you can always work around that. And that sort of meant they launched their token at the wrong time, because they wanted to sort of get the money out. So the token went live much earlier than sort of it needed to for the game. And then, and when the token price starts going down, as we know, it's almost impossible to recover. So they ended up in sort of a bit of a death spiral. And then a lawsuit happened because they couldn't work out the relationship with the initial investor. So that all came out in the public. So no one's going to invest in the company. It's going through a massive lawsuit, and a whole bunch of sort of dirty laundry came out about, what the people were doing with the tokens and how much they were getting paid and blah, blah, blah. So it was all a little bit sort of nasty. So the project, clearly has been in a problematic state for quite a while, even though it looks like a very high end sort of extraction game. But the weirdest thing was this going to China, and I mean, quite, people do expand their games to China, so that's not weird. But obviously, if you have a big hit and then you expand to China, that you're in a position of strength. If you have a game that's clearly dying and you sort of suddenly magically have a Hail Mary pass and you're going to China, then that's a bit odd. So there was lots of eyebrows raised, and obviously, whatever you think about China geopolitically, China is not a place for open blockchain. So the blockchain you mentioned is a governmental permissioned blockchain. So you can't just rock up and make a game on there or make NFTs on there. You have to go through the permission. So it's a little bit like, why are you using a blockchain like that? Obviously, that's how it is in China. Everything's sort of, in a sense, permissioned by the government. So at that point, it did even sort of make sense that there's going to be Shrapnel in the West of running on Avalanche, and then this Chinese version running on this Chinese blockchain, and they'll sort of do a bridge between the two. Or I can't even think if there was going to be some element of bridging between the two. So that sort of made sense. You have some games that are, a Chinese version and a Western version. But then, I mean, it's almost like farcical that Gala, which was a massive sort of viral success in sort of when it was 2018, 2019, 2020, made tons of money. But as a game project, has been absolutely laughable. Basically, it's fallen out with all the people who work in there. There's no games working on there that anyone plays. It's fallen out with all its KOLs. It has an internal lawsuit between its two co-founders. I mean, you couldn't
without blemish as well either.
Oh boy! So if you were an author, you couldn't think a company could exist that was so problematic. I mean, it fell out with its main blockchain. Head of blockchain, and then there's been a whole bunch of other recent stuff where they've basically, looking from the outside, they've been really, people spent a lot of money buying these nodes, and now they're saying you have to spend more money to buy these to run these nodes and stuff. I mean, they've literally, as far as I can see, been just really, really sort of the worst sort of. They have the worst reputation in blockchain. Like no one in crypto blockchain takes them. Sort of crypto gaming takes them seriously at all. So for Shrapnel to suddenly go, we're leaving Avalanche, which is, technically is hard and it's expensive to run a Avalanche chain, but they had loads of support from Avalanche, and for them to sort of go, we're leaving Avalanche and going to this absolutely ridiculous GalaChain that no one uses, and it's probably. Enough. So but it is sad. It's sad. I spoke to, Don Norbury a couple of times. He was the CTO there, and they had, and I played the game. I wasn't very good at it, but there was a game there, and there was something there, and they did raise, a decent amount of money. I think on 30 million, something like that. But clearly it was like 100 million sort of project. So I think they just bit off more than they could chew with that, and didn't go fast enough. And obviously we've seen lots of games fail in crypto for lots of reasons. But if you need a lot of money, then clearly you're in a difficult position.
China is the biggest games market, is followed by the US. So we'll see. We'll wish them all the luck. It might go well. Let's move on. Talk about FIFA Rivals. It announced this week that it hit 1 million downloads via app stores, mainly Google Play. It's been live for 7 weeks. Let's get that right. No, 3 weeks. Yeah. For every project. It's also entered its Adidas season. What else? The big news is the 1 million downloads.
Yeah. Really. And I think the I think they're quite happy. I mean, obviously it's a FIFA branded game. It's the only FIFA branded game out at the moment, so you expect to get sort of that for free. They've not done a lot of marketing, from what I understand. But obviously, it went live with the FIFA Club World Cup when that was going on, so that gave them a bit of a boost. That was what they're aiming for. Although it seemed the game the game didn't have all the modes they wanted, so the game's sort of gone live as this sort of heavy PvP. So all the games in there, you can now play bots. Previously, you could only play against other people. Now there's a bot mode and a person mode, but that's a bit competitive for some people. It's a bit aggressive. For players, you immediately there's no campaign mode really. So there is a single player mode coming. They just couldn't fit that in. So I think they're quite pleased that, given it's not the product they wanted to go live, but they had to go live for the FIFA Club World Cup. But to get 1 million, it's not amazing. Like FIFA Rivals, the American football game. Okay, it's been going for 3 years. That's done like 7 million. So obviously you hope to get that sort of certain amount of virality through the app stores. But I've been playing it, I wouldn't say massively, but playing it sort of regularly every day. And I think it's a really good game. I think because it has these competitive modes, it's focused more towards the competitive element. So they've probably had 1 million downloads, but a lot of people have just, this game's too hard for me. And no one likes going in and getting beat 10 times in a row to get good. So it attracts a certain type of person. But actually that sort of player who is competitive, actually, they give away quite a lot of sort of stuff in the game, including NFTs. So they had these NFTs which are called fragments, and the fragments are these mythical. You need 5 fragments, the right sort of fragments, put them together and get a mythical player, like a Messi or a Harry Kane. So they don't give away Harry Kane, but they give away the fragments. But the fragments are, have some sort of value. So the cheapest ones would be like $1, and some of them might be like $10. And they're giving those away free in the game. So it plays into the competitiveness that if you're in the highest leagues, you're getting these fragments. And it's almost a play to earn, where you can just go to the marketplace and sell them, do a quick sale back to sort of Mythical. So I think it's I've been quite impressed with it. And even though it's not the product they maybe wanted at launch, it's been a more hard edge product that may actually play into what they're sort of doing. But of course, the other thing for Mythical, they got the big game really for the summer is Pudgy Penguins, which is coming out some point in August. So that's a totally different game, a cute social sort of stumble guys type game. Again, has the NFTs. So we'll sort of see how that plays out. So, but yeah, it's they've got Blancos coming as well. So they actually quite a big sort of year for Mythical, and yeah, I think yeah, I mean I'm enjoying playing FIFA Rivals and can see it doing really well. And the thing about Mythical, because they have everything in their Mythical market, which is their NFT marketplace, web-based marketplace, and there is a sort of, the more people you get into the games, the more you can then sort of cross them into other games, and the more you can sort of, like, I'm selling off my NFTs in NFL Rivals to buy NFTs in FIFA Rivals, and they've got a racing game as well coming out. You can start to see that, won't be this year really, but could be the flywheel sort of starts, and you start onboarding people to blockchain, and none of their games mention blockchain. So that's really the first time we've seen anyone do that at sort of mass scale, or even get close to that. So.
Very good. Well, thanks for that. And thank you for tuning in and listening. And we'll see you all next week. Thank you and bye-bye.